Are you thinking about buying a house and want to know how you can pay your mortgage off early? Or you already own a house and want to know how you can pay your mortgage faster? In this video, I'm going to go over 3 simple strategies that you can take to pay off your mortgage fast. Stick around until the end so you can get a bonus tip. Hi, this is Joseph Eslait with Casa Real Estate, and welcome back. If this is your first time visiting, please consider subscribing to my channel as I post new videos every Thursday about all things real estate here in Rochester, Minnesota. So strategy number 1 is to make bi-weekly payments. So you usually make your monthly payments once a month. With bi-weekly payments, you will pay half of your monthly payment every 2 weeks. For example, let's say that your monthly payment is $1,000. What you'll do is you'll take half of that, which is $500, and pay it every 2 weeks. So that means that you'll have 26 payments a year. So 26 times $500 is going to be $13,000 versus if you pay $1,000 every month in 1 year, that's going to be $12,000. So you're essentially paying one extra payment a year. This strategy can shave off anywhere from 4 to 6 years on a 30-year loan. If you have a 15-year loan, you can save anywhere from 1 to 3 years. Now, some banks may allow you to do the bi-weekly payments, and some banks will want you to make a full monthly payment before they apply it to your loan. So that's one thing that you definitely want to be able to confirm with your bank. There are some companies out there that for a fee will help you manage your bi-weekly payments, but in my opinion, if you're trying to save money, there's other better strategies than going that route. Now I want to show you a quick example, so I'm going to switch to my computer screen. So here's a biweekly mortgage payment calculator from the website Bankrate. I'm going to include the link on the video description below. But if we look at a $250,000 loan balance, annual interest rate of 4%, and a 30-year term loan, if you make the monthly payment, you can see here your monthly payment would be $1,193.54. Here it shows you how much interest you will have paid and the average interest each month. And then if you do the bi-weekly payments, you can see you'll be paying half of this monthly payment, which would be $596.77, and your total interest would be $150,450. So you're saving about $30,000 just by paying the bi-weekly payments. And if we scroll down here, you can look at the amortization, which in other words is the schedule of your payments. If you do the standard method versus the bi-weekly, if we scroll down, you can see that at year 25 of your mortgage, you will have paid if you use the bi-weekly method, whereas if you're doing the 30-year standard payment, you'll see that you'll pay it off in 30 years. Now, if we go back and we do 15 years instead of 30 and we calculate this, you can see that the difference in interest that you will have saved using the regular monthly payment versus the bi-weekly, it's a difference of about $10,000 or so, a little less. And then if we look at the amortization table, you can see that by year 14 with the bi-weekly, you will have paid your loan off versus 15 years with the standard. So just I wanted to show you a quick example. Again, I'll have the link if you want to plug in some numbers and kind of do some estimates. And I hope you found this helpful. Strategy number 2 is to budget for an extra payment every year. If your bank doesn't allow the bi-weekly payment method or you don't want to pay a company to set that up, this strategy would be a great way to achieve the same benefits of the bi-weekly method. Strategy number 3 is to send extra money every month. If you can't afford sending one extra payment a year, you can try to round off to the nearest $100 on your payment or just pay a fixed amount every month. Just make sure and confirm with your bank that the additional payment you're making every month is going towards principal. So here's the bonus tip. If you're paying or expecting to pay private mortgage insurance, there may be a way for you to have that removed off your payment. So these are the factors that affect whether or not you can remove PMI. So number 1 is the type of loan. With a conventional loan, you should be able to have your PMI removed. With an FHA loan, typically you can't have the PMI removed. The second factor is your down payment amount. If you make a down payment of 20%, you obviously won't have PMI. But if you make a down payment of less than 20%, the bigger your down payment is, the faster you'll be able to get rid of PMI. And factor number 3 is the equity on your home. So once you've paid down the mortgage balance to 80% of the home's original appraised value, you can request the lender to remove PMI. The goal with removing PMI is that if you're able to do so, you can use that additional savings to help pay down your mortgage faster. You may want to check with your lender on the details of your mortgage. If you would like to know about what private mortgage insurance is, feel free to click on the video I created on private mortgage insurance. Please comment below if you have any tips or thoughts on how you can pay off your mortgage faster. Hope you found this video helpful, and I will see you on the next one.